Welcome to the Town of Rehoboth PowerPoint presentation entitled Town Finances 101, sponsored by the Rehoboth Board of Selectmen and the Rehoboth Finance Committee. My name is Michael Degnan. I am the chair of the Rehoboth Finance Committee and will be narrating this PowerPoint presentation for you today. You can download a copy of this PowerPoint presentation at the link shown here, https://bit.ly/townfinances101. A copy of this presentation can also be found on the town website. Today, what will we be discussing? First, I will cover the role of the Finance Committee in town government. Then, I will provide you with an overview of the town's annual budget process and what your role is as a citizen in that process. Finally, we will summarize the various funding sources that are available at the annual and special town meetings we have, where those funding sources originate from, what the best practices recommended by the Massachusetts DOR are when it comes to utilizing those funding sources, and what the pros and cons of using each specific funding source can be. So first, let us start off with what the role of the Finance Committee is. Howie Carr, a popular talk show host and journalist at the Boston Herald, likens elected officials to Santa Claus. The reason for this is simple, that elected officials help ensure their re-election by ingratiating themselves with their constituency, by giving their constituency a lot of freebies. In effect, elected officials like to play Santa Claus. Well, when it comes to the Finance Committee, we're somewhat, well, you can think of us as the parent in the town government. For those of you with children, you'll probably recognize this photo on the right-hand side. All of us with kids have had, at one time or another, have had to tell our children no when they've wanted a candy bar in the checkout line at the supermarket. And in some instances, the Finance Committee also has to say no to the elected officials that want to give out goodies to everyone. So what exactly are the role, in terms of the role of the Finance Committee, what exactly are the duties that we have? Well, the duties of the Finance Committee are defined both in Massachusetts general laws and the town bylaws. When it comes to the town bylaws, they are defined in Chapter A, Article 4, Section A, Subsection 2, Paragraph C. You can download a copy of the town bylaws from the town's website on the town clerk's webpage. And our duties are also defined in Massachusetts general law, such as Chapter 39, Section 16, as well as other sections of Mass general law. So, looking at the town bylaws, first, they say, and I'll quote, "The Finance Committee shall consider all articles to be inserted in the warrant for the annual town meeting or any special town meeting, and, before said town meeting, shall make a written report thereon to the Board of Selectmen, and when the warrant for a town meeting contains any article or articles under which an appropriation or expenditure of money or the disposition of any property of the town may be made, the Finance Committee shall consider said articles and may, if it deems advisable, give a public hearing thereon and shall report in writing its recommendations to said town meeting." And what's all that really mean? Well, basically, in a nutshell, what it means is that we, the Finance Committee, will make a recommendation on all the financial-related articles that come up at town meeting. And what you'll see is printed in your town meeting warrant that you get in the mail, you will usually see a section underneath each article that says Finance Committee recommendation, approval, disapproval, Sometimes it'll say no recommendation. Other times it will not even refer to the Finance Committee because that particular article does not really apply in terms of being a financial article, let's say. Under Massachusetts general law, we have other obligations to the town, one of which is developing the town budget. And here's the relevant section under Chapter 39, Section 16. And again, I'll quote, "Once developed by the selectmen, the town budget is presented to the Finance Committee, representing the legislative branch, the town meeting. In effect, the local Finance Committee has the same role as the House Ways and Means Committee in the state legislature. It is the Finance Committee's responsibility to receive the budgets from the executive branch, either collectively as a collective whole or individually by department, analyze them, have hearings where the department heads and public can testify, and present a balanced budget to town meeting." And the key phrase here is to present a balanced budget to town meeting. And I'll actually talk about that a little bit more in the slides as we get further on in the presentation. So knowing that the Finance Committee is responsible for preparing the town budget and for making other financial recommendations at town meeting to help advise you, the members of the public, with making a decision, how exactly do we go about making our decisions for our recommendations? Well, one of the ways that we do this is by consulting various state laws. There are various laws that pertain to, for example, how monies can be spent on different types of projects. We look at various policies and guidelines of the Massachusetts Department of Revenue. And I'll actually talk about some of those a little bit further in the presentation when we talk about funding sources. We occasionally look at generally accepted accounting principles when it comes to looking at an article that may pertain to some aspect of accounting that the town is about to undertake. And we also look at other financial best practices that are in use in industry. So although the Finance Committee itself does not take care of the funds or assets of the town, we do in a sense have a legal or ethical relationship of trust with you, the members of the community. And thus, we could be said to have a fiduciary responsibility to the residents of the town. The Finance Committee's decisions are based upon their best judgment of the issues and the finances of the town at the time we make them. Some common misconceptions that folks have pertaining to the role of the Finance Committee sometimes revolves around Proposition 2.5 overrides. And it's not within the purview of the Finance Committee to propose and or advocate for a Proposition 2.5 override to fund the budget that we present. And I'll talk about that in a little bit further in the presentation. The important aspect, or the important point to remember right now is, as you saw from the previous slide, dealing with our responsibilities under Mass General Law, is that we have to propose a balanced budget at town meeting. And a Proposition 2.5 override is not funds that are available to the town to use at the time the budget process occurs. So it's not really a funding source that we can use. It may or may not pass an election. So therefore, a budget that we present to you really cannot take into account the possibility that a Proposition 2.5 override would actually pass. The Finance Committee's role is to advise people on the pros and cons of either a yes or a no vote on all issues. So, although we have a recommendation at town meeting on various articles, you can also ask us what the pros and cons are of a yes or a no vote on any particular issue, because we should have looked at many of those issues and considered both the pros and the cons. of making a decision one way or the other. And so we should be able to help advise you in terms of that decision-making process when you have your own questions. An important thing also to remember is that when you're appointed to a town committee, that you do not lose your constitutionally protected rights to participate as an individual in town government. So it's important to remember that individual members of the Finance Committee may express their personal opinions on issues which may differ from the Finance Committee's voted recommendations. So from time to time, the Finance Committee is consistent of 5 individuals currently at the point in time that I'm recording this. So we may have a vote, and we may say pass a vote for a recommendation with a 3-2 majority or a 4-1 majority, with 1 member or 2 members perhaps not agreeing with the decision of the majority. Well, that individual or those individuals that do not agree with the decision as a whole may turn around and get up at town meeting and express an opinion that is different from the Finance Committee as a whole. And that's their right. As citizens, they have the right to express their own personal opinion on issues which may or may not differ from those of us on the Finance Committee as a whole when it comes to our voted recommendations. And the role of the chair, or who the chair marks as the designee, is to present and defend the decision made by the committee as a whole. This important point to remember is that sometimes the chair or the individual that's representing the Finance Committee may or may not necessarily agree with the decision of the Finance Committee as a whole, but is actually defending and presenting the position of the Finance Committee that was voted. Now, usually it's true that whoever is making the recommendation on town meeting floor or defending it usually does agree with the decision as a whole, but that's not always the case, and it is important to remember. So now that you have an overview of what the Finance Committee is and what our role is in town government, let's take a look at the town budget process, the process that we actually go through in order to craft the budget that you see on your annual town meeting warrant that you're asked to vote on at the annual town meeting, which currently is scheduled in May. The town budgeting process actually starts in early to mid-January. It continues throughout the months of April and May, and it culminates in May at the annual town meeting of the town. Some important things to keep in mind when we talk about the town budgeting process is that the town budgets for what is called a fiscal year, and this is not a calendar year, which most of us are familiar with. The town's fiscal year runs from July 1st through June 30th. So the fiscal year will start July 1st of any particular year and continue through June. For example, in fiscal year 20, that fiscal year will start on July 1st, 2019, and run through June 30th, 2020. The fiscal year numbering indicates the end date, the year of the end date. So fiscal year 20 ends on June 30th, 2020. And again, to reiterate the previous point, is that municipalities are required by law to have a balanced budget. Unlike the federal government, we're not allowed to deficit spend. So each and every year, what you have to vote on at town meeting is a budget that is balanced and does not deficit spend. So the town cannot, over the course of time, run up a $12 or a $20 trillion deficit. It has to be balanced each and every year. So the budget timeline that we actually go through starts in January. And what happens in January? Well, the town accountant prepares a series of Excel workbooks or worksheets, that are for each department head. And each department head sometimes has multiple sheets for different aspects of town government that they control. Each one of these sheets in Excel contains historical appropriation and expenditure data for all accounts under the control of the department head. That information is actually retrieved from the town's accounting system, which is Munis. And the town accountant will run various reports out of Munis and then take that data and import it into these various sheets that are eventually distributed to the department heads. And the accounts that are under the auspices of each department's head control are classified as salaries, wages, expenses, capital, and a generic other category. So after the town accountant goes through this process in January, we will get into the February timeframe. And what happens in February is each department head is assigned a liaison to the Finance Committee. The role of the Finance Committee liaison is to aid the department head in preparation of their budget for the coming fiscal year, along with any warrant articles the department head may propose for town meeting. So, for example, if the Board of Selectmen propose a warrant article to purchase a piece of capital equipment, it's actually a Finance Committee liaison that is assigned to the Board of Selectmen or the Town Administrator's office. And the Finance Committee liaison will work hand in hand with the department head. The department head may also have a liaison assigned to him or her by the Board of Selectmen if he/she reports to the Board of Selectmen. And this is an important point that I'll talk about in a couple of slides, because not all department heads have a liaison with the Board of Selectmen. So in February, knowing who the Finance Committee liaison and who the Board of Selectmen liaison is, if appropriate, the department heads receive their budget worksheets from the town accountant. Then, once they receive those budget worksheets, the Finance Committee liaisons, the Board of Selectmen liaisons, if applicable, and the department heads all meet together to craft the department head's request. And I put the term request in quotes because that is the amount of money that the department head is requesting to actually have to run their department for the coming fiscal year. Now, a common complaint or a common comment that many individuals seem to make as they review the town's budget preparation process is they say that we never really see the town make any reductions in the requests that are made. And that's true to a large degree when you look at viewing the public side of the budget review process. For example, again, talk about this in a few slides, the Board of Selectmen have one or more meetings where they publicly review the budgets under their control. And then later the Finance Committee will have one or more meetings to review the town budget as a whole. And oftentimes people will say, well, geez, you got these budgets and you didn't make any reductions to them. Because that's what they see. They see those public meetings. And the reason why you do not generally see many, if any, reductions at that point in time is any reductions that are going to be made to a department head's budget are actually made in this initial process where the three individuals, the Finance Committee, Board of Selectmen, liaisons, and the department head get together and craft the budget. We will actually make a recommendation at or a reduction, I should say, at that point in time. For example, the police chief may, when we meet, may turn around and say, I really want to add 3 new officers this year. And then the Finance Committee and the Board of Selectmen liaisons with the police chief will discuss it. And after that discussion period that we go through and we debate it back and forth, we may turn around and say, well, Chief, we just don't think that we're going to have the money to fund 3 officers this year. But we think that we could probably fund 1 officer this year. So why don't we put in the budget request 1 officer for this year? And that 1 officer then carries forward. What you end up seeing in the budgets is you end up seeing that single officer all the way through. You never see the fact that really the police chief wanted 3 and that we ended up sort of cutting it down to 2 or 1, as the case may be in my example. So you never really see these reductions on the town side because they are all made as the budget process, as the budget for each department is being crafted by the parties involved. So in February, also, other important points to keep in mind is that department heads are always advised to use what is referred to a zero-based budgeting approach to crafting their requests. Zero-based budgeting means that each year the budget request starts at 0 and each expense must have a factual basis, whether it be historical data, quotes that the department has received, various estimates based upon data provided to them from various sources, so on and so forth, to substantiate what their request is. And so really, when you, in terms of zero-based budgeting, what we would do is we'll actually start with 0 and say, okay, let's take office supplies, for example. And we'll say, okay, well, how many boxes of paper do you need for the photocopier? How many boxes of pens and pencils and rulers and other types of office supplies do you need? And the department head can look sort of historically at that information based upon their utilization over the prior years, and they can come up with an estimate based upon what they project using for that year. This process differs from what is sort of referred to as traditional budgeting, which other departments may use, non-town departments, where that particular technique simply takes whatever last year's request is and adds a fixed percentage to it to offset for inflation or other types of projected growth. So this whole process occurs in the February time frame, and then in March, the town accountant will receive these completed worksheet requests back from the department heads. And the town accountant then takes all of those worksheets and consolidates them into what is known as the budget workbook. And at this point, we still may not know some expenses that the town expects to incur. For example, we are members of 2 regional school districts, the Dighton-Rehoboth Regional School District and the Bristol-Plymouth Vocational School District. And those school districts may not have yet told us what their assessments are to the town. Both of those school districts are, in a sense, vendors to the town of Rehoboth. They are not town departments per se. They are not part of the town's budget process, other than the fact that in a sense, what you could refer to as an educational services vendor, we quote-unquote contract with them to provide educational services to the children in Rehoboth. They may not have gotten us what they expect to charge us for those services the coming fiscal year. So at this point, some of those expenses the town needs to budget for still may actually not be known. But notwithstanding that fact, the budget workbook still has to be completed and forwarded to the Board of Selectmen. And the Board of Selectmen receive that as a collective board to undertake further review and approval over the department requests for the departments that they control. And the reason why this happens is, as I mentioned before, the Board of Selectmen and the Finance Committee each have a liaison to the department heads, but that's a single individual. So the other members of the Board of Selectmen do not necessarily know what the requests are for the departments which they are not the liaison to. So if Selectman A is liaison to the Treasurer's office, well, the other selectmen, B through E, may or may not know what the request is that the Treasurer is going to have. So by consolidating the workbook and then sending it to the Board of Selectmen, the Selectmen as a collective board then have the opportunity to review all the department requests and then make further adjustments collectively as a board to that process, to those requests. And here's a point that I wanted to make that I talked about in a few minutes ago. The Board of Selectmen only hold budget hearings with the department heads under their jurisdiction. The Finance Committee liaisons will often participate as well. And even then, what you may or may not see is you may see that the Board of Selectmen do not even necessarily have budget hearings with all the department heads under their jurisdictions. They may decide that they only want to have a few or 2 or 10 people come in. It really depends on what they feel is necessary for them to properly do their job as a whole. So the Board of Selectmen, will collectively then decide to approve or modify the requests they receive from the department heads via a majority vote. And then the Selectmen's voted recommendations are placed on each worksheet under a column which is called the BOS recommend column. So it's important to remember that the Selectmen do not necessarily review all the budgets. For example, they do not review the budgets of other elected officials. Each elected official has sovereignty over their own budget request. Why is this? Well, elected officials report to you, the people who elected them. For example, the town treasurer and town clerk are elected officials, just as the Board of Selectmen are elected officials. The treasurer and the clerk do not report to the selectmen as their supervisor. So the Board of Selectmen has no authority really to make a modification to the budgets of the treasurer or town clerk or any other elected official, because that elected official's boss is you, the people who elected them. Now, of course, the selectmen can always turn around and make recommendations on reducing, say, the town clerk's budget or the town treasurer's budget. There's nothing to prevent them from doing that. But generally speaking, the Finance Committee will sort of disregard any of those recommendations because we consider the Board of Selectmen and all the other elected officials to be at the same level. No one elected official has a higher standing in our eyes than another elected official. And so therefore we treat all the budgets of the elected officials equally when it comes to that. So the town accountant will receive the voted recommendations of the Board of Selectmen back and will incorporate them into that budget workbook. And then once the budget workbook is complete, the selectmen then vote to send the assembled budget that's now been completed to the Finance Committee for its consideration and recommendation. This process usually occurs in mid to late March. by the time this whole process is completed. So at this point, after the Board of Selectmen has now voted to send the budget workbook to the Finance Committee, it's now sitting in the town accountant's office. But at this point, the budget workbook only contains the expenses the town expects to incur to operate the next fiscal year. Well, we need revenue to fund those expenses. And up to this point, all anybody has talked about has been what the expenses are. Nobody's talked about revenue at all. How does that come into the picture? How do we make money at the town level? Well, actually, I'm going to talk about the revenue sources in a couple of minutes as to how the town makes money. But what the town accountant does prior to forwarding the budget workbook to the Finance Committee is the town accountant will go and collect and receive revenue data to include in the budget workbook from various sources. That data will come from, for example, the Board of Assessors, who provide the town accountant with information on what expected tax revenues are going to be for next fiscal year. And the town accountant will also go and look at data from the state. For example, we get money reimbursements from the state on what is commonly referred to as the cherry sheet. And that information will likewise go into the budget workbook. And the town accountant also has some responsibility for preparing estimates as well. So, for example, there are three principal sources of revenue other than property taxes, which the town accountant will provide information on. That includes what's referred to as the motor vehicle excise tax, local receipts, and meals tax. And what the town accountant will do is will work up a projection on what he or she feels is the proper amount to use based upon historical data. So all of that information, both the expenses and the revenue, once the town accountant finishes that process, are assembled into that budget workbook. And that is then forwarded to the Finance Committee. Usually that goes to the chair of the Finance Committee, who then turns around and forwards it out to all of the members of the Finance Committee. And members of the Finance Committee are asked to review all of the data contained therein. Because, again, remember, an important thing to remember here is each Finance Committee member acts as a liaison to a particular town department, but the other committee members do not. So while, I'll use myself for example, while I may act as the liaison to the town treasurer, I am not the liaison to the highway department. So up until this point, I may be intimately familiar with the town treasurer's budget, but I have absolutely no knowledge of what the highway budget looks like at all, until the chair sends a copy of the assembled workbook out to me, and then I can actually take a look at it and see what is the highway budget, what do those numbers look like. So this is why the assembled budget workbook is sent out to all of the members of the Finance Committee, and the Finance Committee members are asked to review all the data contained therein, and then to forward any questions that they may have or requests for the department heads to come before us to discuss their budgets back to the chair. And by doing that, the chair can then turn around and make arrangements with department heads to come in to provide testimony on their budget, or the chair can get the answers that the individual is seeking, if it's a simple question about a number in the budget. Then the chair may be able to get a very quick answer from a department head and then turn around and provide it back to that particular member of the Finance Committee. So this process we sort of go through in advance of holding our public meeting. After this process occurs at, well, I should say sort of at the same time as that review process is occurring. The chair will post a meeting, at which time we have a public meeting to discuss the budget and craft the budget as a whole. So the Finance Committee will meet publicly to review the budget workbook in its entirety, and that could be one meeting, it could be a dozen meetings. We really don't know. It depends on how complicated the budget is and what the revenue looks like for the coming fiscal year. But all of our meetings are posted with the town clerk in accordance with open meeting law, and they're publicly posted on the town website for people to view when the schedule is. And they are open to all members of the public to attend those meetings, to actually hear our discussion and how we arrive at different decisions that we make. So in April, again, we're going through this process in April, we may have one or more department heads come in to answer questions about their budgets if members of the committee wish them to come before us. Not all department heads come. In fact, in most instances, it's actually very rare that a department head actually needs to come before the Finance Committee to discuss their budget. And the reason for that is that by having liaisons from the Finance Committee craft the budget of each department hand in hand with the department head and possibly a Board of Selectmen liaison, we've really taken the steps to eliminate a lot of unnecessary problems down the road by having outlandish requests come before the Finance Committee. So it's actually quite rare these days that we actually need to have a member, a department head, come before us to talk about their budget. The absence of a department head at this Finance Committee review process really means that each committee member feels that he or she is adequately schooled to consider the department's request and debate any adjustments thereto. So, for example, if again, I'll use my own example. If I'm reviewing the town treasurer's budget and I don't ask the town treasurer to come before the Finance Committee to discuss his or her budget, then the logical conclusion is that I am satisfied with the information, or I am well versed in the budget process enough that when the time comes for us to review that budget, that I'm knowledgeable enough to discuss it and to discuss whether or not we need to make adjustments to it. And therefore, I don't need the department head to come in. In absence of a department head coming to the Finance Committee review, the Finance Committee liaison to that department really acts as the department's advocate during the meeting. So the town clerk's department, for instance, has a liaison, and if the town clerk isn't there or wasn't asked to come to the process, to this review meeting, then really the liaison for that town clerk's office would really act as the advocate for the town clerk during this meeting. Now, during the meeting, public input is often taken as part of the review process. However, it is important to note that under Massachusetts open meeting laws, public input is not actually required. This is a very common misconception that a lot of people have, is that although meetings have to be posted and the public can attend meetings, there actually is no requirement that the public be allowed to participate in the actual meeting. And generally speaking, from the Finance Committee's perspective, we try to allow as much public input into the process as possible, because it helps alleviate a lot of problems or questions or comments at town meeting. And as those of you who have attended our town meetings in the past know, our town meetings can go on for quite a while. So anything that we can do in advance to alleviate that process, to make our town meetings not as long, we really do try to do it. And if that means that we take some input at a finance committee meeting and we answer some questions from people, hopefully that means that that's 10 minutes or 20 minutes of time that we do not have to spend at the town meeting. So what actually occurs? I've talked about this meeting that the finance committee has and sort of provided you a broad overview of what actually happens at it. I'll get a little bit more specific. What really happens? Well, the first thing that we do is we review all of the revenue estimates that are provided to us in the workbook. Now, several of these estimates are considered to be hard estimates. For example, the tax levy, and we'll talk about that a little bit later on in the presentation. While other estimates are considered to be soft estimates. What's the difference between a hard and a soft estimate? A hard estimate really means that we're going to not make any modifications to that number. That's a number that's either calculated by the Department of Revenue or calculated by the assessors and according to Mass DOR standards, and that's just not a number that we can change. The tax levy, as I said, is a good example of that. We can't just turn around and say, hey, we think we're going to use $35 million this year for a tax levy. That's not the way it works, unfortunately. So the other thing that we do as part of this review process is we review all the historical data provided with the soft estimates, as well as taking into account the professional opinions provided by the subject matter experts on those figures to decide whether or not to accept the figures as they are presented to us, or if we want to adjust those figures higher or lower. Now, once this review of the revenue is complete, then we have an estimate of how much money the town is going to have to spend next fiscal year. So the next step is we've looked at the revenue. So the next step is to review all the department budget requests or the expense side. And then what we do is we make adjustments collectively as a board, up or down as necessary, or as occurs most of the time, the request is accepted without modification. Now again, we get criticized to some degree that we do not make a lot of modifications to the request. And again, I just point out that the reason for this is that a member of the Finance Committee has already worked with the department head, has reviewed the request, and in all likelihood has already adjusted the request down or up or what have you prior to it even getting to this point. So in many instances, it's simply not necessary for us to make a large number of modifications to the budget when we go through this process. And then our recommendations, the amounts that we decide to use, are then placed in this workbook in what's called the FinCom Recommend column. And you then see that FinCom Recommend column on your town meeting warrant when you look at the budgets that we present in our report. Now, if the total expenses that we expect to have for next fiscal year do not exceed the expected revenue, guess what? Our job's done. We're going to raise more revenue than we're going to spend, so we don't have really anything else to do at this point. However, sadly, this rarely happens. So we have to go back and make an unpopular decision on which accounts cannot be funded or which warrant articles can't be funded at their requested amounts, and then make reductions to the recommended funding. Remember, the Finance Committee must present a balanced budget to town meeting by law. So the revenue estimates that the Finance Committee uses to create a balanced budget must be reasonable and customary and stand the review and scrutiny of the Massachusetts Department of Revenue. For example, we cannot just make up a number for motor vehicle excise tax. The number that we use for motor vehicle excise tax has to be reasonable. It has to have a factual basis. And that factual basis has to undergo a review process with the Massachusetts Department of Revenue. So we can't just, I think, for example, let's use an example of $2 million that the town expects to raise based upon the historical numbers. Well, the Finance Committee can't turn around and say, geez, you know what, we need an extra $1 million this year in revenue. Let's put in $3 million for the motor vehicle excise tax. The Massachusetts Department of Revenue is going to look at that and go, no, we don't think that's reasonable, because historically that just doesn't show to be the case. And what happens in instances like that, if the DOR does not agree with the revenue estimates that the town uses, it will delay the town being able to set its tax rate in the fall, because DOR will kick information back to the town and make the town adjust its revenue estimates before the DOR will allow the town to set its tax rate. And that could then have much broader financial implications to the town, such as by not being able to set the tax rate, the town will not be able to send out estimated tax bills on time, and it just, things could get really messy. So the revenue estimates that you see, and we usually present revenue estimates in the town meeting warrant to help educate the residents as to where we're coming up with our estimate of how much money we're going to have to spend this year. If those numbers have to really be fairly reasonable for us to go forward. And another really important point is that the Finance Committee cannot base its budget on non-existent revenue. So we can't go to town meeting and say, we want you to pass a budget which is based upon a tax increase through Proposition 2.5. Because the revenue that the town might receive as the result of a yes vote to a Proposition 2.5 override election simply may not be there. So we cannot base this budget that we present to you at the annual town meeting on a Proposition 2.5 increase. We have to present it based upon those revenues that the town reasonably expects to receive that year. So, if necessary, the Finance Committee will make adjustments to balance the budget, and then our final recommendations are voted for what, as of the time I'm recording this PowerPoint presentation, are the 4 budgets that are currently presented in the town meeting warrant. And those currently are Articles 2 through 5. The Finance Committee provides a series of appendices to support the basis of the recommendations, and these appendices appear in the town meeting warrant as part of the Finance Committee's report. The chair, or an individual the chair designates, will prepare a letter from the Finance Committee, which is also published in the warrant along with our recommendations. Our recommendations, the letter, and all the supporting documents are forwarded back to the Board of Selectmen for inclusion in the warrant. The Board of Selectmen prepare the town meeting warrant, the printed version, with the town clerk, and mail that hard copy printed warrant containing the budget recommendations to all the town residents at least 2 weeks prior to when town meeting is held, in accordance with the town's bylaws. And this brings us into May, late April, early May, depending upon how the weeks fall. In May, usually right at the beginning of May, the Board of Selectmen will host a financial summit for residents to attend, which reviews the financial health of the town. And also as part of that financial summit, the selectmen will discuss the various articles, the reasoning for the recommendations. The Finance Committee will talk about the reasons for their recommendations for approval or disapproval, and what the funding sources are. Then, in the second week in May, all the residents that decide to attend will come to the town meeting to vote on the budget recommendations as well as all the other relevant warrant articles that the Finance Committee provides. And you as a resident can amend the recommendations of the Finance Committee up, you can recommend them down, or you can accept them as presented. Ultimately, you make the decision. It's your money, it's your taxes, you decide how it's spent. All the Finance Committee does is make a series of recommendations. Ultimately, the decision rests in your hands as to how your tax money is spent. So this is why it's critically important that you take the time to come to town meeting and let your voice be heard at town meeting as to what you believe the proper decision is in terms of how your tax monies are spent. If a lot of times we hear people complaining about various things going on in town, and then you ask them, well, did you come to town meeting and vote? And they say no. Well, if you don't take the time to come and vote at town meeting, and hey, let's be honest, it is an inconvenience to come out on a nighttime and sit there for several hours, but that's really to participate in democracy. That's really the price of being able to participate in the type of democratic process that we have. Now, assuming the budgets are passed at town meeting, the voter-approved budget will take effect on July 1st. Now, if the voters that come to town meeting decide to spend more money than the town anticipates it will receive in revenue, then the budget becomes out of balance, and a Proposition 2.5 override election is necessary to raise the additional revenue needed to balance the budget. And once again, only town residents, those who go to vote at that override election, can decide whether or not to increase their taxes. The Board of Selectmen and the Finance Committee do not arbitrarily decide that we're going to raise your taxes. We'll present a balanced budget at town meeting. If the voters that come to town meeting decide that they want to spend an additional $1 million, an additional $2 million, whatever that number is, above what the town expects to receive in revenue, and subsequently that override election results in a yes vote to approve it, then the voters, the residents in town, have decided that they want to raise their taxes. Only the residents can do that. Board of Selectmen and Finance Committee just cannot say, hey, we're going to raise your taxes an additional $2 million this year. The power rests with the people. You have the decision. And so that brings us sort of into June and July. Now, an override election, if one has to occur, has to take place by September 15th. Once the selectmen authorize an override election, the town clerk needs a minimum of 35 days to prepare for that election. And that process includes ordering ballots, the supplies needed for voting, etc. The authorization of the selectmen for that override election takes place at the earliest, the Board of Selectmen meeting following the adjournment of town meeting. So if town meeting goes through the third week in May, well, and the next meeting of the Board of Selectmen is not until the first week in June because of the way Memorial Day falls, then you need another 35 days after that from that meeting for the town clerk to prepare. So this means that usually any override vote is going to take place at the earliest in mid-July. And then, pending any override, the approved budget will take effect on July 1st. So that's the process of town budgeting. What do we have for town revenue sources that we use for funding the budget of the town and other warrant articles that you may be presented with at town meeting? Well, before we can spend any money, we really need to know how much we have and where it comes from. There are three ways that the town can generate revenue. We generate revenue by levying taxes. We generate revenue through fees, such as, let's say, an inspection fee that you pay when you put an addition on your house. And then we have a broad category of other. And that could be something such as interest income that the town has received on investments that it has made. In general, when you are reviewing your town meeting warrant, you will see a revenue source recommended as the source for funding that article. And what are those revenue sources that you will most commonly see? One is overlay surplus. We're going to talk about these in a little bit more depth as this presentation goes on. We have stabilization, capital stabilization. We have various special revenue accounts, such as the Public Safety Building Fund. We have the Community Preservation Account and the Agricultural and Natural Resources Trust Fund. And we have free cash. Another revenue source that we have is referred to as raise and appropriate, sometimes also called taxation. And that actually has several different components, which includes the real estate and property taxes that the town charges, new growth, our annual Proposition 2.5 increase, any debt exclusions that the town happens to have passed, state aid, solar payments in lieu of taxes, meals tax, local receipts, and motor vehicle excise taxes. We're going to talk about all of these in more depth. So overlay surplus. What is overlay surplus? Overlay surplus are unused funds released from the town's overlay reserve account by the assessors. Okay, well, what's the town's overlay reserve account is probably the first thing that you're going to ask. Well, the overlay reserve is an account established annually to fund anticipated property tax abatements, exemptions, and uncollected taxes in that year. And the overlay reserve is not established by the normal appropriation process. It is raised on what is referred to as the tax recap sheet, which is a document prepared by the assessors, which is provided to the state. This is not an article that you see on the town meeting warrant. It's part of the tax rate setting process that the Board of Assessors goes through. They establish this overlay reserve as part of that, the tax rate setting process and the recap sheet. So I'm do a little shameless plug here. This is always a good opportunity to go view a video called Property Taxes 101 with the corresponding PowerPoint presentation, which has been recorded and is available on Rehoboth TV's website. So the overlay reserve, or overlay surplus, that we budget money is an amount which is voted on by the Board of Assessors. Each fiscal year has its own separate overlay reserve. There is not just one overlay reserve account for the town. Each fiscal year, as part of the tax rate process, has a separate overlay reserve. The reason for that is if somebody comes in and they want to get an abatement or exemption for a particular fiscal year, the funds for that abatement or exemption come out of the overlay reserve that is established in that fiscal year. Now, prior to town meeting, the assessors will go through and evaluate the status of each year's overlay reserve account and will determine if there are any funds which can be reverted back to the town for other use. And the sum of those amounts from prior years, when they're added all together, is referred to as overlay surplus. And at the end of each fiscal year, any unused overlay surplus is closed out to surplus revenue, which is also referred to as free cash. So generally, we use overlay surplus first as a revenue source at a special town meeting or an annual town meeting. We also have stabilization and capital stabilization accounts. A stabilization account is a special reserve fund into which monies can be appropriated and reserved for later use across fiscal years for any lawful municipal purpose. Capital stabilization is a stabilization fund intended for large capital equipment and building purchases or renovations. So, for example, you might buy a new town hall out of a capital stabilization account if you had one large enough. It's important that the town establish and maintain healthy stabilization accounts because lending agencies look favorably upon municipalities that maintain stabilization funds when a municipality goes out and seeks financing for different types of projects. Some information about stabilization and capital stabilization accounts you should be aware of. 1, a majority vote at town meeting is required to appropriate into a stabilization account. A 2/3 vote is needed to appropriate from stabilization. So to put money in, you need a majority vote. To take money out, you need a 2/3 vote. And the state has done this because they want to make it easy to save money and more difficult for you to spend money. And you need to think of these accounts as the town's emergency savings accounts. They're really there for emergency purposes. Using funds from either of these sources should be considered a funding source of last resort at town meeting. And the reason for that is, for example, God forbid, let's say we had a fire at town hall and the town hall got condemned. Well, how would the town conduct business? It would need to have an emergency town meeting and take money out of the stabilization accounts to somehow arrange for rentals or other space where the town could conduct business. Under normal circumstances, the town just does not have money sitting around in bank accounts that it could tomorrow go out and write a check. It actually needs to go through the appropriation process. And if you rely on other sources of revenue, such as property taxes, well, those monies are usually spent funding the budget and other warrant articles. These funds in stabilization accounts really are more for emergency purposes. We also have special revenue accounts. These accounts are established by town meeting vote, and they're funded via a variety of methods. And they are funded by an appropriation at town meeting. So town meeting will appropriate money into these accounts at town meeting via a vote. And when they're established, usually they're established for a particular purpose. For example, we have the Public Safety Building Fund, which is a special revenue account. This account was established by a town meeting vote in May of 2007. It was funded, money was appropriated into the account by the sale of town-owned real estate, such as the North School. And this account, when it was established, it was intended to fund renovation or building of a new public safety complex. And at town meeting, a majority vote is required to appropriate money out of that fund, which is a little bit different than a stabilization account. We also have the Community Preservation Fund. The Community Preservation Act was developed, or I should say adopted, by town meeting in April of 2009. And the CPA adds a 1% surcharge to your property tax bill. The monies from the CPA serve a variety of purposes, such as historical preservation and open space. The recommendations for expenditure from this fund are provided by the Community Preservation Committee. They are not provided by the town's Finance Committee. And a majority vote is required to appropriate money out of the Community Preservation Fund. We also have the Agricultural and Natural Resources Trust Fund. This was established by town meeting vote in 2007. And expenditures from this fund are recommended by the Agricultural and Natural Resources Preservation Council, not by the Finance Committee. This was funded many years by appropriations annually at town meeting via a warrant article. For those who remember, Walt Monroe, who used to be a town resident who has since passed away, he was a huge advocate for this trust fund, and used to get up and speak quite well about the needs for appropriating money into this account. It was really intended to fund the preservation of open space in Rehoboth. However, it has been made somewhat redundant and unnecessary with the adoption of the Community Preservation Act. However, the trust fund still exists out there and could be used to acquire open space. It has different restrictions on it than the CPA does, so it operates a little bit differently. And a majority vote is needed to appropriate into and out of this fund. Now, what's the biggest source of revenue that the town has is what's referred to as raise and appropriate, or just collectively known as taxation. This is the major source of revenue that the town gets. And usually it is only available in the annual town meeting. And the reason for that is we usually spend it all in the annual town meeting. Occasionally you'll see raise and appropriate available as a revenue source in the fall town meeting, and that's usually because some of the state estimates come in higher than what we budget for as part of the budgeting process. And so that difference between what the state actually gives us versus what we budget for is additional raise and appropriate or additional taxation money that we can spend in a special town meeting. It doesn't happen all the time, but it will happen from time to time. But generally speaking, this revenue source is only available in the annual town meeting. So what are the components of raise and appropriate? We talked about these a little bit earlier. We have the property tax levy, that's personal property and real estate. We also have an annual Proposition 2.5 increase. By law, the town's property tax levy is allowed to increase 2.5% annually. We also have something referred to as new growth. And we'll talk about that and describe what that is in a few moments. We have any debt exclusions that the town has passed. We have state aid, money that the state is going to give to us. We have solar pilots, payment in lieu of taxes. We have the meals tax, local receipts, and finally the motor vehicle excise tax. So we have the property tax levy. The property tax levy is calculated by the Board of Assessors. It is a tax that is levied on all real estate, residential, commercial, and industrial in the town. It is also levied on personal property, principally on businesses, and it's based upon non-real estate tangible assets of the business. So, for example, to use an example, the Cumberland Farms on 44 and 118, they have freezers in the building. Those freezers would be considered personal property, and there would be a tax on those assets. The personal property tax levy is equal to approximately last year's tax levy, last year's annual Proposition 2.5 increase, and new growth combined. It will also include any overrides passed in the previous year. So from year to year, it's fairly easy to project the growth of what the property tax levy is going to be. The real variable piece of the equation is the new growth estimate, because new growth will vary from year to year. It depends on what's happening in town in terms of new buildings going in. And of course, whether or not any overrides have passed. That will affect the tax levy from year to year. But generally speaking, it's usually pretty easy, relatively speaking, to sort of project what the property tax levy is going to be from one year to the next in round numbers. And again, I'll take this opportunity to insert a shameless plug. Please go watch the Property Taxes 101 video. It provides a lot of really good information about your taxes, how your property tax is computed. I highly recommend that you watch it. And I'm not saying that just because I narrated it. So, we also have, as part of this revenue, raise and appropriate, we have the annual Proposition 2.5 increase. And in terms of those revenue sources that you saw as part of raise and appropriate, this component is really the only predictable source of new revenue available to the town. The other revenue sources that sort of comprise raise and appropriate are really variable, are less predictable to varied degrees. The annual Proposition 2.5 increase is predictable because under state law, the town's property tax levy can only increase by 2.5% over last year's levy. So to use an example, if last year's tax levy was $20 million, the Proposition 2.5 increase is going to be $500K, which would be 2.5% of $20 million. This number comes from the Board of Assessors, and this is we consider to be a hard number, just like the property tax levy number that we get from the assessors. This is not a number that, as part of that budget review process I talked about several slides ago, this is not a number that the Finance Committee would adjust at all. This is a hard number provided to us. What's new growth? New growth reflects certain increases in the tax base. They become a permanent part of the levy limit. And they fall into three basic categories. Properties that have increased in assessed value since the prior year because of development or other changes. So for example, you add an addition to your house. That's new growth. Exempt real estate property that has returned to the tax roll. For example, if you have a building that is owned by a nonprofit that was exempt and that building is sold and the new owners are not tax exempt, now you're going to see tax revenue from that property. That's new growth. New personal property. New business goes in and puts in, let's say a CVS were to come into Rehoboth. There would be all those freezers and all that other personal property in there that you see related to that store's operation now becomes all taxable personal property. That's all new growth. And any new subdivisions that come in, anytime somebody builds a house, somebody buys that empty lot of land next to you, builds a house, that's new growth. New growth does not include changes to the market value of properties. So your property value going up from $350,000 to $400,000 does not mean that the town realized a $50,000 increase in new growth. And this number, again, is calculated annually by the Board of Assessors. For budgeting purposes, the Finance Committee generally views the new growth figure as being a hard number provided to us by the Board of Assessors, because the Board of Assessors are the subject matter experts on exactly what is happening in terms of things being built, new subdivisions going in, new real estate, personal property being added to the tax rolls. They're the subject matter experts that deal with this stuff on a day-to-day basis. They really know usually what the new growth figure is going to be, or they're the people that can really estimate it. So the Finance Committee considers this number to be a hard number that comes to us from the Board of Assessors, and we do not make adjustments to it. We also have debt exclusions. Debt exclusions create a temporary increase in the levy limit to fund the payment of debt service costs for capital projects funded by borrowing, such as the senior center or the new school roof projects. Debt exclusions are for a set term, such as 10 to 20 years, after which they come off the tax bill. Debt exclusions are temporary increases in the tax that you pay. Now, yes, if you're 75 years old, a 20-year debt exclusion is very likely to be considered a permanent increase. But these really are temporary increases, even though the term can be for 20 years. Debt exclusions require a two-step approval process. First, they require a majority vote at town meeting to place a question before the voters in town on an election, and then it requires a majority vote at town election to approve the debt exclusion. And this amount is calculated by the treasurer, who maintains the debt service schedules for the town. Subsequently, this number is considered to be a hard number by the Finance Committee. If the town treasurer says that that the debt service of the town is going to be $400,000 this year, that's the number it's going to be. The finance committee isn't going to turn around and say, well, we think it's going to be $500,000 this year. We have state aid. State aid collectively refers to monies that are given to the town by the state, and they fall into various broad categories such as Chapter 70 monies, veterans benefits, and unrestricted state aid. It's important to note that because the town is a member of a regional school district, we ourselves do not receive any Chapter 70 funds. Chapter 70 funds are they're directed directly to the regional school district. The town never sees any Chapter 70 funds directly. State aid is reported to the town annually on what is referred to as the cherry sheet. And it's referred to the cherry sheet because years ago it used to be printed on a red piece of paper. State aid is variable. It depends on the state budget. Usually you'll see, well, at least one or two different budgets that are proposed at the state level. House 1, Senate 1, and the governor's budget. So the Finance Committee can only use an estimate during the town's budgeting process of how much state aid that we're actually going to get. The actual amount of state aid that we're going to get is oftentimes not known until after town meeting. And this is why, as I said before, sometimes you'll see raise and appropriate appear on the fall town meeting. Well, if we have a state aid number that turns out to be lower than what is actually signed into law by the state as part of their budgeting process, then that difference becomes additional money that we can spend at the fall town meeting. Because this is a variable source, when we look at the various budgets at the state level and the different amounts of state aid that may come to us, we budget on the conservative side. We take the lesser of all the numbers, so we do not find our revenue short. So, for example, if the Senate says that they want to give us, to use some round numbers, if they say that they want to give us $100,000, and the House says, no, we want to give you $75,000. The Rehoboth Finance Committee is going to use the $75,000 number because we don't want to use the $100,000 number and then later on in the year need to come back to you at town meeting and go, we need to get $25,000 back from somewhere because we over budgeted. The flip side is that if we budget for the 75 and then we end up getting the 100, at the fall town meeting we come back and say, hey, we got an extra $25,000 in raise and appropriate. We'd like you to use it to fund project XYZ on the warrant. The town also has solar pilots. A solar pilot, which is an acronym for payment in lieu of taxes, are agreements that are negotiated between the town of Rehoboth and solar farm owner-operators. We have a solar pilots account, which was established in May of 2014 by town meeting, and it receives funds from all of these solar pilot agreements. That solar capital account required an act of the general court to establish once it was approved at town meeting. And this account, as established by the general court, can only be used for the purchase or repair of land and facilities for municipal use. It cannot be used to supplement the town's operating budget or to pay for any other operating expenses of the town, such as funding the regional school system assessments. It can only be used for the purchase of land or the repair of facilities for municipal use. The annual growth into this account depends on the agreements that the town enters into. We have what's called the meals tax. Now, this is one of three soft numbers that the Finance Committee looks at and makes a decision on. Up until this point, all the other accounts that I've talked about, if they're used as funding sources, they're considered to be hard numbers. The meals tax, local receipts, and motor vehicle excise tax are what we consider to be soft numbers, and we'll analyze and determine if we want to adjust them up and down. The meals tax being the first of these. The meals tax was a local option excise tax of 0.75% on the sale of meals at restaurants originating within Rehoboth, and it was adopted by the town starting January 1st of 2010. So on a $100 tab at a restaurant, it raises 75 cents. So for every $133,333 in gross sales, it will generate $1,000 in revenue. And the taxes that are levied on any food and or beverage that has been prepared for immediate human consumption and provided by a restaurant or restaurant part of a store. It currently accounts for less than 0.5% of the town's overall revenue, and it does not have significant growth potential due to the rate and the market. As you can see, it's less than 1%, and it's based upon restaurant sales. So unless we start getting a lot of new restaurants in town going up on Route 44, Route 6, we're not going to see a lot of new meals taxes. If people start going out to eat a lot more at restaurants in town, then we may see some growth in the meals tax. So this number, while being a soft number, we look at the historical data for it and sometimes adjust it up or down depending upon what we see as the trend in the meals tax. But you don't see a lot of revenue from this account. So it really depends on local economic conditions. And it's not, while it helps, every little bit helps, it does not generate a lot of money for the town. We also have what are called local receipts. And local receipts is a term that's used to refer to all generated revenue other than the real estate, personal property, and excise taxes that the municipality collects as part of its annual operations. Some of these revenue streams are variable, while others are fairly static. Overall, these revenue streams do not vary substantially year over year unless influenced by outside factors. So, what are some examples of revenue sources which would be classified as local receipts? Some examples would include other excise taxes, such as the farm excise, penalties and interest. If there's any penalty or interest for paying your taxes late, that would be an example of a local receipt. Fees paid to the town for different services provided, such as police details. Rental income, if there's any rental property that the town has. For example, the town property used to house cell towers. If we receive rental income from those cell towers, that would be considered a local receipt. Other department revenue. So any town department which accepts funds for a variety of purposes, say in the example of the town clerk processing dog licenses. those license fees would be considered a local receipt. Licenses and permits. If your company needs to have a license to conduct business, say a common vic license, or a permit if you're taking out a permit to add an addition to your house, those are examples of local receipts that you would pay to the building inspector's department or to the town administrator's department. Fines and forfeitures, such as non-sufficient funds. You bounce a check and the town charges you an NSF fee. That's an example of a local receipt. And finally, investment income. Any interest that the town receives on investments that it makes, other than those funds which are in stabilization accounts. Monies that are placed into stabilization accounts, when they generate interest, the interest goes back into the stabilization account. So the stabilization account grows over time. So this would be any other investment income. The town, for instance, may have one or more bank accounts that it needs, that it uses, I should say, to pay bills on a regular basis, or it may deposit money into an account from which the town's payroll is paid, and that account may generate some interest while the money is sitting in that account. So that would be an example of a local receipt as well. So as you can see from these revenue sources, these things are generally speaking fairly static from year to year. Yeah, sure, we may see some increase in building permits year over year, see some fluctuation there depending upon the economy and if there's a lot of new building going on in town. But as you can see, generally speaking, local receipts is a category where, although we have some variability, it's not really going to vary a large amount year over year, and there really isn't a lot of potential for new sources of local receipts. Brings us to motor vehicle excise tax, and this is the last funding source that we're going to talk about. So the motor vehicle excise tax is an excise tax which is levied on all registered vehicles owned by residents. It's based upon a calendar year. The bills are sent out in the first quarter of the new year for your vehicle. And the value of the vehicle is determined by the Commissioner of Revenue. The value of the vehicle is not based upon the actual purchase price or book value of the vehicle. And another important point to remember is this value that's assigned to the vehicle remains constant throughout the life of the vehicle for the purposes of calculating how much motor vehicle excise tax you're going to pay on that vehicle year after year. The tax rate for motor vehicle excise tax is set at $25 per thousand of assessed value. To this slide. Let's go back forward here for a second. So you see here in the slide, as you start to go forward in the years, the revenue starts dropping off. $495, $330, $220, $138. So the only way the town is going to continue to grow new revenue in motor vehicle excise tax year over year is two ways. One, people buy more and more expensive vehicles, or two, we increase the number of vehicles that we have. If you decide to buy a vehicle and you're going to hold on to that vehicle for 10 years, that's going to hurt the motor vehicle excise tax in town, because we're going to see the revenue from that vehicle that you own drop over the course of time from the high point of $495 down to $55. And because you're not buying another $22,000 car, you're holding on to that older car, we're not going to see that new revenue. So for the town to get a growth in motor vehicle excise, people constantly have to recycle their vehicles over a fairly predictable period of time. And if they don't, if the residents of town all of a sudden started to say, you know what, we can't afford to buy a new car this year because the override just passed and our taxes went up too much money, and so we're going to hold off on buying a new car, that's going to end up hurting the town in motor vehicle excise tax, because the value is going to go down, or I should say the amount of taxes that it's going to be collected on the vehicle that they do own is going to go down year over year because they're not replacing it. This problem's compounded significantly because the budget preparation process for next fiscal year occurs prior to the two major motor vehicle excise tax commitments the town receives being processed. So when the finance committee looks at the revenue estimates for next fiscal year, we do not have historical data on what the current fiscal year's motor vehicle excise tax collections really looks like. The only number that we have is from the previous fiscal year. So to illustrate this with an example, in preparing the fiscal year 2020 budget, the fiscal year 2020 budget is prepared during fiscal year 19. But at the point when it's prepared in fiscal year 19, the finance committee and the town accountant only really has the revenue estimates, the historical data for motor vehicle excise for fiscal year 18. So we haven't finished fiscal year 19 yet. So because of that, we're lagging a year behind in the revenue estimate. So subsequently, we really tend to attempt to budget conservatively when we look at motor vehicle excise tax, because the trend of whether or not people are going to continue to trade in their vehicles on a regular basis is not something that we're going to know when we're preparing the budget and looking at the revenue estimates for motor vehicle excise tax. That concludes a discussion of the funding sources that comprise raise and appropriate. We're now going to talk about free cash. And this is the last funding source that the town utilizes to pay for different types of warrant articles at town meeting. Now, what is free cash? It's often a misunderstood concept that people have. Free cash is a revenue source which results from the calculation, as of July 1st, of a community's remaining unrestricted funds from operations of the previous fiscal year based upon the balance sheet as of June 30th. That's a really fancy way of saying it's all the money that's left over at the end of the year after the town has paid all of its bills. Okay? To draw a parallel to our own household, if our paychecks are $1,000 a month and all of the utilities and everything else we pay are $500 a month or $600 a month, then our household, quote unquote, free cash after we've paid all of those bills, $400. Now, that's a similar concept for free cash at the town level. At the end of the fiscal year, after we've paid all of the bills of the town and we've taken in all of the revenue of the town, it's what's left over from the revenue after we've paid all the bills. Free cash is a number that is certified by the Department of Revenue in the fall. This number usually comes to us in October, and it's usually a funding source that principally shows up in the special town meetings. Slides here to how free cash gets generated. Okay. So as you see here, free cash gets generated in several different ways. These are just a few of the ways. But excess receipts in receipts in excess of revenue estimates. Well, what happens if we do a really good job budgeting those actual receipts on our revenue estimates, and our actual receipts match what our revenue estimates are? Well, we're not going to get any free cash from that source. What if we do an excellent job budgeting department line items, and so departments don't turn back money at the end of the year, that they end up spending their entire budget? Well, there's no free cash from that source. What if we don't have any town property to sell? Well, we're not going to have that one-time revenue source going into free cash. So free cash is highly variable. It can be a huge number one year. It could be an incredibly small number the next year. We just don't know. Subsequently to that, it's considered to be a non-reoccurring revenue source because, well, let's say the year that we used $920,000 in free cash to balance the budget, why did we have an override for fiscal year 19? We had an override in fiscal year 19 because we spent $920,000 in free cash the year before to balance the budget, which in fiscal year 19 we didn't have. So that $920,000 wasn't reoccurring. It was one time. It was there. We spent it. And then we had an operating budget the following year, which was based upon the fact that we spent $920,000 of non-reoccurring revenue. So the following fiscal year, when we go to build the budget, well, we don't have that revenue anymore. And the only way to make it up is to have an override. So you saw in fiscal year 19, you saw an override because not only did you have to make up the $920,000 in free cash that you spent the year before, but you also had a tremendous increase in other budgets, which spent more than that. And we ended up with a $2.1 million override request in order to fund the operating budgets. So spending free cash to fund the budget of the town really is it is a recipe for disaster, and it will result, doing it on a continued basis will really result in the need for more overrides going forward, because at some point in time you're not going to have the free cash again in order to fund the budget. Subsequently, the Finance Committee looks at free cash when it goes to do the budget. Really, we do not want to use free cash at all to fund the budget if we can at all avoid doing so. Now, DOR does state, though, if you project free cash as a revenue source for the next fiscal year's operations, that they recommend you restrict the amount that you use to a percentage of the total. Under sound financial policies, the Department of Revenue recommends that the community strive to generate free cash in an amount equal to 3 to 5% of its annual budget. Historically, this is something that we were doing, but as of late, we have not been able to do this due to the constraints of revenue that we have and the tremendous growth that we have seen in some of the budgets that the town has to fund on the annual town meeting warrant. Free cash should not be depleted in any year, so that the following year's calculation would begin with a positive balance. We do try to do this, if at all possible, even if it's a small amount of free cash going forward. And the DOR also states that conservative revenue projections should be used and departmental appropriations should be orchestrated to produce excess income and departmental turnbacks. If you are conservative in your revenue projections, actual revenue comes in higher than your revenue projection, that's going to roll into free cash, right? If you make a departmental appropriation, which will help produce excess income, or the department will turn some of that money back at the end of the year, that's going to roll into free cash. So DOR would like to see these types of guidelines put into place in order for the community to generate a free cash figure somewhere between 3 to 5% of its annual budget. So that concludes our discussion on town finances and the budgeting process and the role of the Finance Committee in town government. If you have questions about anything in this presentation, then I highly encourage you to call me. My phone number is here listed on this slide. Or if you have a more detailed question that you'd like an answer to, you can also send me an email at michael.p.degnan@gmail.com. If you have another question about something in this presentation that doesn't deal with town budgets, finances, or you're really not sure, then I recommend that you contact the town administrator's office at 508-252-3758. And the town administrator's office can either answer the question or can direct you to whomever the appropriate person is that you should be speaking to, whether it be another town official or another department. So for further reading, if you'd like to look at some of the information, some of the background information from which this presentation was derived, there are several documents online that you can take a look at, such as the levy limit guideline. The second link contains information on the what's called the New Finance Officials Handbook, which talks a lot about such items as what overlay reserve is. And the third link is the link to the presentation on Property Taxes 101, which I alluded to in my previous discussion on several slides. I'd like to take this opportunity to thank several individuals who helped me with the preparation of this presentation. Doug Furtado, who is currently the Vice Chairman of the Rehoboth Finance Committee, Susan McBride, Martin D'Amico, and George Solis, all Finance Committee members as well. George also is a member of the Dayton-Rehoboth Regional School Committee. Linda Greaves, she is one of the workers in the Board of Assessors office. Cheryl Gouvet, our town treasurer. Jerry Schwall from the Board of Selectmen, currently the chair of the Board of Selectmen at the time this video was recorded. And Roberta Oliveira, who is currently the town accountant. And I'd also like to thank both Richard Barrett and Derek Russo from Rehoboth TV, who assisted in the production of this video. Richard Barrett also currently being a member of the Dayton-Rehoboth Regional School Committee. So that concludes our presentation today on Town Finances 101. Again, I realize this was a very long discussion. I hope that you took something away from this presentation. Again, the link, if you would like to download a copy of the PowerPoint presentation, is https://bit.ly/townfinances101. Thank you. Have a good day.